Okay, huddle up, everybody. Welcome, you lovely people. We're going to go through the analysis that we spoke about yesterday, see where we are, see what paths are still in play. But before we do that, of course, there's a lot of people freaking out today. This is the new chart from Plan B on Twitter. The red line is this cycle, and the blue lines are the past two cycles. And what he's pointing out is this dip that we've had over the past month or 2 months, depending on how you measure it. Looks very, very similar to 2013, where of course the price was going absolutely ballistic, but we still put in a month of slightly downward movement. And in 2017, where this almost looked exactly the same, maybe this has been slightly steeper to the downside. However, we went up much quicker going in. So this looks very similar to the previous two cycles. Sorry, people messaging me today asking if we are still on for $300,000 this cycle. Absolutely. You know, this is what we expected. We expected these pullbacks. I have shown this chart very regularly. This is the pullbacks from 2017. And what are we doing right now? Well, it looks very similar to this correction here, this 38% correction. Remember, we had the 33% in January. Now, what are we having now? We'll check it in a minute, but we're about here. And what happens after we come out of this pullback? Well, then the price goes on to the cycle peak around September, somewhere hopefully around $300,000. So let's see first what's happening today. Well, Bitcoin is down 3.75%. We're putting in another down day. So we've now had, let's call it 1, 2, 3, 4, 5, 6, 7, 8, 9 days where we haven't made a higher high. Of course, quite bearish action. And for the last few days, we have been anticipating. This wasn't our base case going into this pullback, and I'll explain why in a second. But now we are where we are, and we need to follow the price. We'd laid out 3 possible scenarios. A was that we bounced very quickly, either today or yesterday. That obviously hasn't happened. B is that we put in a small bounce and then went down to a 38% correction. And C, that we just continue to capitulate downwards and put in that 30 to 40% pullback and then bounce straight up. Now it looks like we're following C very closely. So can we be sure that we're following C and that we are going to bounce very soon? Well, no, we can't. We can do a process of elimination. We're certainly not doing A, but we might be doing B, and I'll show you why. If we go to the halving tracker, and the blue line is this cycle, I want to point out, as we were showing on Plan B's chart a second ago, we've had this pullback almost exactly in line with where we put it in the last cycle. And what happened in the last cycle? Well, if we are exactly where it shows, then we actually put in a pullback, had a bounce, and then came down for our 38% pullback. So that is scenario B. And at the moment, we can't say for sure if we're doing that. It certainly looks like that. Or if we are actually near the end of the long correction and we're about to bounce and then we are out of the woods. Why might it look like that? Well, we have put in some big moves over the past few months, and then we've been sideways for a couple of months. So does this sideward action almost encompass the first part of this pullback, and therefore right now we're experiencing the final capitulation before we head back up to the all-time highs? We don't know. The only way we will know that is on the way up, and therefore these options look like this. We will either have a bounce and then head down to 38% or similar. Of course, I can't be that specific. And that would now be option A. Or option B is that we have this is our final capitulation, and then we are heading up after we've found the bottom. Let me just move this over. After we found our bottom, wherever it may be, and we bounce all the way up to the new all-time high. And that would be option B. How will we know which is which? Well, it will depend on when we take out the all-time high. Unfortunately, we can't be more specific at this moment. So look, let me go down to the 4-hour view. Let's have a look. Right. So we are bouncing at the moment. You know, we're already 5% off the lows. And it might be that we continue upwards, let's call it for another 15% or so. At that point, I'm just going to go to my other chart with my drawings in, actually. Hope you're following along. So if we bounce from here, we're probably looking at this resistance line in here. Let me turn it red, which will be just under $60,000, because that will be from the bottom. That will be a 25% retracement. So I'm looking closely at that level. If we do head up into that area, or when we do head up into that area, we may get rejected and head back down and find our low, or we may carry on through to the all-time high. And when we take out that level, we're probably in the clear, but certainly we can confirm that when we pass 65,000. So that would be scenario B. Sorry, scenario A. Scenario B is that this is our capitulation, and we're just going to head through to the all-time high and then onwards. And in that scenario, we can't be sure where the bottom is, unfortunately. We may be at the bottom now. That would be a 27% correction. But like I've shown you, we are used to having 30+% corrections. And particularly, you know, 33, 38, 36, it is normal. So it may just be that we reverse very soon, tonight or tomorrow. Head back down to, let's call it 45 or 40,000, whether it's a 30 to 40% pullback. And then it would be a very sharp bounce out of there, because we have been going down very sharply. So at the moment, we have those two scenarios on the table. We have to be prepared for both eventualities. And of course, they were not our base case. Our base case was that we were bouncing from here. And I just want to recognize why I was incorrect on that, because I always want to be learning. And me going through this stuff with you is actually, you know, brilliant for my learning and teaching. Well, because the price had been sideways for a couple of months, essentially, it's not then normal or common for us to put in a sustained correction, because the market isn't overheated. And particularly with Bitcoin, I've been looking at these charts most of the day, and it's certainly not common for Bitcoin. Usually, I mean, you can see all these sharp corrections, they come off the back of a very sharp increase. So why did that not happen this time? Very important for our future analysis. Well, my best hypothesis, and I think it is the only hypothesis, is that, as you know, this year, the blue line, we've been tracking well ahead of where we expected to be. And particularly, you know, if you follow my mouse, between, let's call it 175 days after the halving through to a couple of months ago, let's call it 275 days after the halving, that 100 days, we went up very, very quickly. You see the massive increase here, even though we had this correction, a massive increase straight away. So we put in a lot of our work here, and then we've tailed off at the top, and now we're dipping. This is not that common. You know, even in the first cycle, you can see we did a lot of the work, and then the correction came straight after, and it was a long sustained correction. So it did slightly catch us off guard, but of course, as you know, I have been preparing for the eventuality, and I've been preparing you for the eventuality. That's why we had A, B, and C in. And that's why I've been continually talking about our mid-cycle correction that we should all be prepared for. So not over leveraged, and certainly have our mind set to be able to withstand it. So we may be in it. And if so, then at least we were prepared for it. We will wait and see again what the market shows us. We now have our options A and B drawn in. Let me sort this out. No, okay. And certainly we'll know a lot more over the next 24, 48 hours. The weekend is going to be very, very interesting. Weekends are always interesting in crypto. We will see whether those at the weekend would like to bid Bitcoin up, and maybe if so, we've found our bottom, or maybe we're on option A and we find a dead cat bounce and then start tailing off again next week. Or if we keep selling off. Look, if we keep selling off from here, it could be a very red weekend. But if so, the bounce from there should be quite dramatic. And are we concerned about the reasons why this happened? Well, no, not really. You know, the main trigger last night, because the market seemed to be getting slightly stronger, and then Joe Biden or the White House announced that they were looking to double capital gains taxes in the US. And then there was a rumor circulating that they were going to put 80% tax on crypto. However true that second rumor is, I can't confirm at the moment. Of course, all of these just are more justification for crypto, and certainly more justification for holding your crypto. And as well, a lot of it's unlikely that those proposals will get through into legislation in their current form. Most likely it will be a watered down version. As has happened a few times over the last month or two, it's just that news event triggered a whole load of liquidations. People are getting very, very over leveraged at the slightest bit of strength in the market. And then as soon as there is let's call it a negative news item, then the cascade of selling begins. And that's probably what we're going to see all throughout the bull market. However, what we do expect to see is that when we're clear of this, whatever it may be, because we've had so much selling now over a sustained period, when we're clear of it, whether it's this week, next week, the week after, then what we're looking at next is, as we come out of this pullback here, and of course it might look similar to this pullback here, is that we then move into the parabolic price movement. We then move into our move from even if we go down to $40,000, which we might, that's probably our worst case scenario. It's then 40,000 up to, what is it? 250, 300, 350,000. So lots of exciting moves to come. Stay patient, stay focused, and keep the eyes on the prize, which is September. And I will most likely catch up with you over the weekend, because I'm sure there'll be plenty to talk about.